Greg DeSimone, how are you?
I'm great, Dom. How are you?
I'm good. People listening to this podcast can already hear Greg and I laughing under our breath because that was the best pre-show giggle I've had in a long time, Greg. That was good. I'm glad we didn't.
Maybe I'll repeat it someday if we get to see them in person someday.
Hey, it's a good reminder for those of you who are listening to this as an audio, as a podcast. These are also published as videos on YouTube. And I do that so that people can watch them from their desk, put their headphones in, etc., while they're sitting there and they don't have to just listen in the car. But let's get to the topic at hand. Greg, thanks for joining us. The topic here today that we've got you to talk about is actually a big one that affects everybody, regardless of the size of their business. And it's about how to choose the right CPA for your construction firm. So why don't I get back to serious talk? I'm now doing my Ron Burgundy voice. Greg, can you tell us a little bit about who you are and why you would be talking to us about CPAs for construction anyways?
Sure. So Greg DeSimone, I'm with Beacon Equity Advisors, which is a mid-market M&A firm, which means we sell companies with $5 million in revenue up to $50 million in revenue. So basically we sell companies in that size. That's what lower middle market is. I'm also a recovering CPA. I started my career as a CPA, practicing CPA at a Big Four firm. And then I moved into corporate and was an in-house chief accounting officer, in charge of accounting for venture capital backed and private equity backed and public companies until I was sick of it. Because there's a lot of compliance work, a lot of make sure you tick and tie the boxes in compliance work. And I was more of a, hey, how do we make this thing work? How do we make this better? How do we become? I was a big picture guy, and I was also, I'm a big fan of financial literacy and financial education, not just personal finance, but inside the business. How do you understand what's going on to make better decisions? How do you not worry about what just the economy reports say, but what does that say, and how do you translate it in a way that a operator, a business person, can use to make better decisions?
Real language, yeah.
Right. And that's what happened was I just got tired of the compliance work, and someone has to do it. It's a really important role, particularly if you're a public company. But I just decided someone's got to do it. It's just not going to be me. And I left to become a coach and consultant. And then my practice over the last 11 years has morphed into a exit planning and M&A.
Right. And Greg, let's stop for a second. There's a couple of industry terms that are being thrown around, and everybody listening doesn't have the same background. Both you and I came from corporate backgrounds into entrepreneurship in the ways that we have. So you mentioned M&A. What is M&A?
Mergers and acquisitions. So mergers is when two companies come together almost equally, and acquisitions is when one company buys another company. Either they buy the whole stock or they buy the assets.
Right. So you're from your accounting background, you've become a specialist in helping people. Which part of it? Selling it or getting ready to sell it?
Both.
Oh.
I tend to. It ebbs and flows. Right now, it's a lot of helping people sell. But my foundation of how I got there was I helped people prepare to transition the business from one generation to the next. And if that wasn't available, preparing it for sale so they could get the money out of the business that they had been building up for multiple years.
I remember one of the first times I heard you speak, because you and I have known each other now for 10 or 15 years, long time.
12
years there.
You're right in the range. You got it right.
Big picture,
I'm a
guys.
former CPA, so I had to get the number.
You had to get the number right. I'm going to say things wrong to you just to watch you freak out that I got the number wrong, just for fun. But I remember one of the things you said, and of course I'm going to get it wrong, so I'm paraphrasing. So give me that flexibility right now. But you, one of the things you said is you turn numbers into the stories they're trying to tell you. And I thought that's interesting because I'm not a numbers guy. I need to hear the story. I need to see graphs and charts. I can't see a string of numbers on a page. It doesn't make any sense to me. But once that gets turned into a pie chart or a colored graph, I'm talking I need the full circus treatment. Then I get it. More, but then you also have the story to it, and that's what I've enjoyed about when I've worked with you before on different deals and on different engagements is you say, look, this is the situation and this is how it affects the business, and everybody around the table goes, oh, yeah.
And that's important, is mapping the qualitative, the numbers to the story. And it happens, it's important every day. Well, when I'm trying to sell it, it's really important because I can't say one thing and then the buyer comes in and looks at all this stuff and says, well, you said all these things, but the numbers don't add up. This can't be, one of these things isn't true. But it also means if you're trying to get a line of credit, or you're trying to get a term loan or with a bank, a loan with the bank, banks loan, first of all, to people. Do they trust that this person will say what they're going to do and deliver the money? And then they say, okay, what they just told me, do the numbers back up what they told me? So you have to be able to tell your story, understand why what you're doing is important, why you're different, why you're credible, why you can deliver what you say, and then your numbers have to back it up.
Right. So when I go to choose a CPA for my business, what are the things I should be looking for and I mean, go as wide on that as you like, because I would imagine I need a different type of CPA at a different stage of my business.
Right. Well, first of all, if you have a strong internal accounting team and you just need someone to file your taxes, there's lots of CPAs that can do that. They don't add much value, and I hate putting these people down, but they don't. They're just a step above TurboTax. I mean, if you at the end of the year, the only time you talk to your CPA is, okay, here's my trial balance or here's my shoebox. Hopefully you're not doing a shoebox, but I know that's the case. Sorry, my dog just came in.
I saw that. That's pretty cute. It's all good.
So if you only see them once a year and that all you're sending them is your information and they spit back a return to you, and the only reason you're doing it is because you're not comfortable doing taxes, there is a value to that, but not much. It just is a comfort level, like, hey, this person can enter it into the software better than I can enter into the software. Most businesses, I feel, need another level. And there's lots of other levels. One is like, hey, I need them to be able to interpret this information to me a couple times a year, or be on call to help me make business decisions. And the example I use is, I talked about my dad last time. And the reason I started as a CPA is my dad bought his business when I was 8th grade, maybe.
Yeah.
And I remember him talking to the CPA, and the CPA was at a kitchen table just talking about, okay, we're buying this business, he's buying this business and he's got decisions like, okay, should I lease these trucks or should I buy these trucks? And he'd walk through the process. Here's how you would evaluate leasing versus buying, and what are you trying to accomplish? Yeah. Should I structure my real estate entity a certain way, or how do I charge my business rent from my real estate entity to
I love it.
Maximize
so many
cash
people
value?
Overlook that. Yeah.
So he went through, so when I watched my dad talking to a CPA, I'm like, I want to do that. Like, I love numbers, and the guy was helping my dad make decisions using the numbers. And what I found is when you get into corporate accounting and you get to work with CPAs, I thought they were all like my dad's CPA. They're not all like my dad's CPA.
Your dad's you're saying your dad's CPA was good?
He was good.
Detailed and thorough.
He was an advisor. He did the tax returns. He did the monthly financial statements. He put the compliance statements to the banks, the covenants to the banks. But he also was there. My dad said, hey, should my margin seem to be eroding? Should I lock into a purchase contract with these 3 vendors? This is what it's going to mean for pricing, but this is what it's going to mean for terms. Like I might have to pay faster. Help me figure out the pros and cons of paying faster, getting better rates.
Right.
So if you're looking for someone just to do tax return, there's a million people that add no value. Find the cheapest person to do it.
Yeah.
But they're not going to add value. But if you need someone to be a business advisor, you need to find someone when you talk to them, like, hey, how many times do you talk to your clients? So these are questions. You're going to interview a new CPA.
Yeah.
And if you're going to qualify them, it's like, hey, how many times do you meet with your clients? If they say, I don't really meet with them, I just get the package. I'm like, well, then they're the type that's just going to do the tax returns. If they say, well, I meet with them quarterly.
Right.
Or I meet with them monthly. Or even better, it depends on my client. I assess their needs and they tell me what they want, and we set up a schedule based on what they need.
Right.
So figuring out how often do your CPA talk to you? Are they there just to give you numbers, or are they there to give you advice and help you plan?
Yeah.
I'm a fan of finding a CPA that will help you plan. They're probably going to cost you a little bit more, but I'll tell you this:
do they?
CPAs are.
But
yes,
do
because
they?
you're going to. But they don't actually bill enough. When the ones that give lots of extra service do not bill enough.
They don't
You
bill
get a
enough for
lot
the value that you get
for
as
the
a business
value they
owner.
give.
Yeah.
The difference between someone who is just going to do your tax return versus someone who will talk to you 2 or 3 times a year, or maybe even talk to you monthly. Yes, it's going to be more, but it's not a straight line. You get way more value with someone who's willing to spend the time with you and be that business advisor.
So what if I'm summarizing what you're telling us about choosing a CPA is there's a point when having a reactive CPA is fine. Maybe as you're just growing or getting things sorted out, having somebody who's just going to review your tax your returns is fine. But at some point in the business, when you're running it on purpose, when you're running a business on purpose, you want a proactive CPA who's ahead of you saying, come on over this way, or watch out for these little landmines. These are the things to watch for so you can make the decisions that you need to make wisely, not blindly.
Right.
Yeah.
Exactly. I also think that it's also important to find a CPA that you understand. And I'm going to give you an example. I was one of those CPAs who thought I could make myself sound smart by spouting off all the rules. Like, now I was not a tax guy. I was, there's different types of CPAs. Like there's audit and attestation. That's how I started. So I was in financial reporting, making sure the financial statements are correct and analyzing financial statements. And quite honestly, if you're in the United States, you don't need to know tax other than for a 4-hour section of a test. You have to have 1,000 hours of audit and attestation to become a CPA. Then there's tax people who only do taxes.
Right.
And then within tax people, there are people who just do individual and corporate returns and are called compliance people. That means they're just churning out returns. But there are people that are specialists on M&A transactions. There's people that are specialists on gift and estate tax plans. There are people that cross over both that are forensic and litigation specialists. Like, okay, there's a shareholder dispute. You're getting divorced.
Right.
So you have to dig into where the money really is and the numbers are and how to split it up evenly, whether you're divorcing your business partner or you're divorcing your spouse.
Yeah.
And
not all of those specialists are found in one person.
Rarely, if ever. It's like, I would not trust someone who says they can do all that stuff. It's like going to your doctor. You have your general, you go in for your physical, and the doctor says, I found a couple issues. One is I found a heart murmur. I think you're going to need a valve. And I also see that you have migraines, so I want to do a brain scan. And I also, you talked about your feet hurt after you run, so I think you might have some issues with your plantar fasciitis. And he says, you know what, I can handle all those things. Do you really want to talk to a doctor who's putting the stent into your heart, going to do a brain scan and do the neurological assessments, and is going to decide what to do to cure your plantar fasciitis through orthotics or some other?
Yeah.
Doctors don't do that. Attorneys don't do that.
No, attorneys don't do that. But you know what, Greg? Carpenters, electricians, and plumbers don't do that. There's plumbers who specialize in high pressure valves, and there's plumbers who specialize in service work for homes. You call a different specialist for a different task, right?
Exactly.
A carpenter can be a carpenter for all sorts of things, but some carpenters are on high rises and some are doing kitchen and bath renovations. They're still carpenters.
You could be a finished carpenter, or you can be a framing carpenter, or you can. It's all. And the same thing with CPA. It's not all are the same. So you got to pick the right CPA for what your business needs. And sometimes you might need 2 CPAs. And I give an example. I just sold a construction company last year, right before actually this year, is right before the shutdowns with COVID. And when we started with them 9 months before that, I was looking at the work. I asked the CPA, I said, here, this is what I think the offer is going to be. Can you please lay out a range of tax assumptions and allocations of what the after-tax take-home pay is going to be after this transaction for our client? And he said, well, just take 25% of the proceeds. And I said, well, that doesn't take into account how much we're going to allocate to each asset, doesn't take into account if there's an employment agreement, doesn't take into account how much we can put into the real estate versus the business, doesn't take into account if there's an employment agreement, doesn't take into account how much basis, like this person bought the business before, so they have an investment. So there's all these things moving around.
And this is this was that business owner's current CPA or CPA at the time. And you're dealing with him as the the M&A broker, the business broker. Okay.
So we went through all those processes. I said, I told my client, I said, hey, I think we should get a new CPA. I said, you don't have to get rid of your guy for your tax returns and to do your, if you end up leasing this building, to do your real estate tax returns afterwards and in your personal returns. But for this transaction, we really need someone who's quick and if he understands M&A transaction tax rules,
Right.
because there could be a big impact in how we
Allocate.
do these things. And we can negotiate depending on what's important to you versus what's important to them. If we know the landscape, we can negotiate. Now, and we can find arbitrage on what's important to them versus them and after tax. And you might get less money but on the top, but more money in the bottom, which is what you care about. In hindsight, he didn't switch. He says, no, let's just go through this. I trust this guy. The day before the transaction comes up, he goes, my CPA, I think, screwed this up. He says, I owe $300,000 more in taxes.
Oh, no.
And it's because he couldn't think proactively. He couldn't think through the transaction. He had to see all the information.
Wasn't
he was
a
the
deal
guy,
guy.
like, no, he was the guy to send me everything and I'll tell you what the numbers are going to be. I'll tell you what the return's going to be. So when we asked him, here are the hypotheticals, think through the process, help me plan, he couldn't do it. So his number at the end was different than what he told us in the planning stages.
And he took a $39,000 haircut on the deal because the CPA.
300,000.
Oh, 300. I thought you said 39,000.
No, 30000.
Yeah, that's 3 with 6 zeros. Let me just help you out there, Mr. CPA guy. $300,000 haircut on a deal. And so just to play with me for a second, how much would it have cost to bring another CPA in on that deal? What would the fee package have been from a specialist, like an exit? Sorry, I don't want to use key buzzwords. A CPA who is familiar with selling, an M&A CPA.
It would have been a transactional M&A tax attorney or tax accountant. As little as 10, as much as 25.
So let's go to the high end and say 30,000.
Yep.
Just because. So if I had invested that other 30,000, I would have recouped that $300,000 loss. Those are better than Vegas odds.
Yes.
Right? Put 30,000 on the table, you're going to get,
and
better than.
I'll give you another. If you having a good CPA, just like a good doctor, a doctor will sit there. You have your internist, or you have they go through your physical and they identify as an issue.
Yeah.
You have a heart murmur, you need a heart stent. Your general practitioner or internist is not going to sit there and try to fix that for you. They're going to say, I have a guy, I have a specialist. I need you to talk to this woman, this guy. And they set up referral and send you there because they want you to get the right service for the right situation. If you have a good CPA, they will do that. Like I just had a company that I was on the buy side. I helped this guy buy out his ownership. He was a young guy who bought out a 92-year-old owner. And there were some tax issues involved. And he had a really good CPA. Actually, I referred to the CPA. Because he does all the things I was talking about earlier. He does all the planning. He meets with his client. He's a business advisor and he understands tax. But there's a complicated rule on how to make an election that only relates to transactions, M&A, mergers and acquisition transactions.
Okay. Yeah.
And he said, I know this is applicable here. Just like a doctor says, I know you have a heart issue.
Yeah.
This guy goes, I know we have an acquisition and we have a Section 338 issue. But I'm not the right guy to go through the calculations.
So he had the confidence to say, I can see the issue, but the actual path through that issue, we need a guy. We need that right guy or gal. We need that right specialist.
Right.
Yeah.
Another example, which a lot of your owners will probably see on the database, you don't have to do a transaction because I'm using a lot of transaction stuff because I've been doing that lately. You own a building. And you are amortizing, in the United States, you amortize the building cost over 39 years. Well, if you do a cost segregation analysis, which is a term that allows you to break apart all the pieces of the building. So they'll say, hey, the wires in the wall aren't 39-year life, they're 10-year life.
Right. The fire system, the fire alarm.
The venting, all the different components.
Yeah.
You need an engineer and someone who understands how to break it into components and to document it correctly that the IRS will accept that allocation to take $1 million building and break it where you're going to amortize over 39 years and break into parts where
the roof's only got 15.
You're going to take in 5 years.
Yeah.
Another one's going to be 15. So this guy, again, he has a guy for that. When he sees that as a business owner and then they're just taking the 39-year amortization, he goes, there may be some opportunities for savings. We need to bring in another guy to do this.
Greg, you know what? This whole real estate question is such a big one. I'm always begging the listeners on this show and on the other show, buy your building. But that brilliant little piece of information you just shared, that you could amortize different parts of the building at different rates, like the roof different than the walls. Right. I didn't even know that. That's right. Brilliant. Can you imagine the financial impact of that?
It's huge. And usually the guy that they're going to hire will typically charge anywhere from $7,000 to $12,000 to do this analysis. And if your building's, I think down here, if your building's worth more than $250,000, you're going to at least get a 3 or 4 times payback on the cost to document it.
Gee.
The bigger your building, the bigger the upside.
Wow.
Yeah. And I'm the same as this guy that's CPA. Like, I know that's an issue. I could triage it quickly. I'm like, you have this issue, this issue, this issue. You have a cost segregation issue.
Right. But we got to get somebody.
Yeah, I can't do that. I can't fix it. I know it's an issue. And I know there's people that can do it. It's just not me.
This is amazing.
A good CPA will do that.
This is incredible stuff, by the way. Very, very good. I'm glad you're on here, Greg. Now, you've been on the show before.
You're lucky to have me, Dom.
Okay, here we go again. This is how the show started before we hit record. Okay, but
you want me to pick more guests for you? Because I can tell what a good guest does.
Yeah. Are you the guy? I need a guy.
I'm not it.
I need a guy. Do you know what? I actually have to thank a gentleman named Jeff Gratney out of Kalispell, Montana, who asked me we've got a Facebook group. It's called Contractor Strategy Group. And that group is only for contractors. It doesn't matter what type of trade you are. He happens to be an electrician, but we've got all sorts of construction trades on there. And it's just where owners go to talk owner language, right?
Yeah.
Where we talk about the business issues. We're not talking about how to build better pools and ponds. We're talking about the business of the construction business. Anyways, Jeff, out of, I think, frustration, said, hey, listen, Tom, can you find somebody to talk about how to choose the right CPA? And so that's where I came to find you. But I know you're a business broker is what most people would call you. You're at the higher end of business brokerage, though, because you do what's called, as you said, mergers and acquisitions, which tends to be a higher dollar value. I wonder how many people here are feeling a little left out because they're in that million to sub under $1 million to maybe 3 million range. How do those guys choose? I say guys, I mean people. I'm not discounting anybody else that's listening, but there's changes happening in my business. If I'm trying to get over that $1 million hump, maybe changing CPAs or adding a specialist is part of that. When do I know I'm having trouble with the CPA I've got and it's time to change?
2 things. If you only talk to them to do your tax returns, you don't have the right CPA if you're trying to grow and get bigger. You need someone who will be your partner. And they can think through both the financial issues and give you advice for that. They can help you prepare for, as you get bigger, you're probably going to need financing with a bank. So they're going to teach you how to present your financials in a way that a bank will have confidence that you can pay it back.
Yeah.
And they will also help you as you plan and as you plan to grow and you get bigger. There are different tax opportunities or tax savings opportunities, but you have to plan to take advantage of them. You can't just get to the end of the year and say, oh, I have a lot of income. How do I get rid of it? If you want to reduce your taxes, you have to think about, here's where I'm going. Here's where it could be. What are my options to reduce it? And put those strategies in place. So if you're only meeting a person once a year to do tax returns and you're planning on growing, wrong person. Second part is they have to speak. They have to be able to explain it to you in English. I think I started this earlier, but I didn't finish it. I used to go to a board meeting, and I was like this young. I was probably the youngest executive. I was in this board meeting, and I explained all these new accounting rules to the board, and like how they're going to impact our financials. But I was like spouting off, oh, it's SOP 97-2 and FASB 109, and says this and this, and the CEO, and I thought I did a great job. I was brilliant because I explained all the rules. I had all the numbers right. And the CPA, the CEO comes in after the meeting and he says, Greg, everything you said was technically correct, but completely useless. Says, I don't know what to do with what you said. The board doesn't know what to do with what you said. So I'm sure you're correct. That's why we hired you, because you know this stuff. Explain it to me so I can do something with it.
Right.
Your CPA has to do the same thing. They may know every single code down to the sub letter of the chapter, but that's what they're paid to do. They need to be able to explain it to you so you can actually take that information and make decisions with it and act upon it. So if you don't understand them and they're not willing to talk to you in a way that you can understand, get a new CPA. You don't have to keep them.
Yeah.
I said, and a sign of intelligence is not saying stuff that you don't understand. A sign of intelligence is taking really complicated stuff
And
and making the other person understand it.
Yeah. You know, and you and I have known each other for a long time. I don't try to be the smartest guy in the room. I try to be the most curious. And sometimes I think I speak too casually, too off the cuff, but I'm trying to make complicated things really, really simple. And that's, I think, why you and I have always, worked so closely and well together. I remember when I sold one of my past businesses, and you know about this company, it wasn't in construction. It was a mail order pharmacy, and, revenues were 120 million. I had two other partners. And when we went to sell that business, it was a complicated transaction. And relying on my CPA at the time, he said, Dom, here's what I have to do. I have to build you a train and all the compartments on the train, and I have to build you the tracks. The tracks are going to go for 7 years, and the train is going to take it there. And this is the package I put together to do that. And I looked at it and went, yeah, that makes sense. Because he used some silly little analogy, a train and tracks and cabooses and stuff like that. And 7 years, I'm like, oh, okay, I understand now how we're going to do the capital gains allocation and things like that. But if anybody listening is feeling like their CPA is talking above them, what I'm hearing you say, Greg, is get a new CPA.
Exactly. Well, that guy that sold the construction company with the $300,000 issue.
Yeah, issue. $300,000 is a big issue.
Yeah, thing. He had a $300,000 thing go on, but he afterwards he said, "Yeah, I never really liked him because I never understood what he was saying." And I'm like, and this is after the fact. If we couldn't help him, I'm like, we asked you to change. You said no. You had this $300,000 issue. You're finally deciding to maybe do something. And actually, as a little postscript, it took him 9 more months before he switched CPA. He called me and said, "Hey, do you have someone that would work with me to help me solve this issue?" And I actually did have a couple people to refer to him. Again, I had to say, okay, he doesn't own the business anymore. He's now just he's allocating purchase proceeds. He has a real estate building and he has an estate. So it's a different CPA than someone who's trying to grow a business.
Right.
So, but I was laughing to myself and a little bit upset. I'm like, you said you never understood what he said. That's why you'd always called me to translate what he said. I said, well, what did you do for like the 20 years before you decided to sell your business and you didn't know me?
Right.
Who was translating for you then? And how many bad decisions did you make? How many missed opportunities were there because he said something and you didn't know how to interpret it or ask the right question to make sure it was right for you?
Yeah.
Or there were other options. Was this what he wanted or was it what you wanted? And I think that's really important, making sure that they can explain it to you in a way that you understand so you can make decisions, because it's your business, it's your financials. They're there to guide you and help you. They're not there to be the no. And the other thing too is if you go to a bank, I have a partner who does what I do, but he came from the banking. And one of the things he did say to me, he goes, I never trusted a business owner. He said, well, you have to talk to my CPA. You have to talk to my CPA. If every question you have to go talk to the CPA because you didn't understand it, he didn't really trust that you could run the business. So you need a CPA that does all the technical stuff for you, but explains it to you so you understand what's going on. So if you're going for $1 million line of credit, or you're trying to buy capital equipment and you need to get a term loan or a leasing facility, you can look the banker in the eye and say, this is why I can pay you back. This is what we're going to do in the top line. This is what our margins are going to be. This is why I can deliver this margin. Here's how I'm managing my fixed costs. And here's why, after all that, I can still cover the monthly debt payments on this loan.
Right. You have to be able to relate it, but you can't, an owner can't do that if they have to quote code. They can only do it if they can use analogies and stories and, you know.
And a good CPA will coach you to say, and you don't have to be the expert. You don't have to know all the code. You just have to understand the basics of what you're trying to accomplish. So if your CPA can coach you, explain to you how you're looking at financials and what are the 3 or 4 things you have to know. That's the key. You don't need to know all the things the CPAs. That's why you hire them. But you need to know the key things that you can control on a daily basis and identify, like, wait a second, my CPA said to watch A, B, C, and D. E's come up about 8 times in the last 4 months. I don't know what to do with E. Let me go call the CPA and, like, hey, I'm watching these 4 things. This 5th thing's coming up.
You know, that just happened to me the other day. This happened to be in a cabinet shop. And we were talking about debt service ratio. So the 2 owners, what's that? Did you just say you don't know what that is? Oh. All right. Hey, Greg, just for our listeners, what is debt service ratio, please? DSR.
It's how much income you have to cover the amount of debt you have.
Thank you. Oh, God, you killed me. You made my heart stop for a second. So I'm talking to the 2 owners about debt service ratio because for quite a long time, we've been tracking their DSR, the debt service ratio, on the dashboard, on the numbers we use to help manage the company. Simple stuff. You and I would both know that from business coaching that we do. And so I asked what I thought was a simple question. I said, when was the last time you talked to your accountant, CPA, about the bank's opinion of your DSR, your debt service ratio? And they're like, well, I don't know. I said, well, text the guy right now. They know the guy really well, kind of on a personal basis. And this is what happens. You get to know that accountant really well. And he texts back and he goes, oh yeah, the bank hasn't worried about that for years. You guys are good. But they've been fretting about it and worried about their debt service ratio number. And it's been consuming every day because at one point the banker said, we're watching your debt service ratio. And if you guys step out of line, we're going to call your covenant. And so literally been living in fear. But their CPA never told them, you're good.
Right.
It's just a simple communication thing.
Yes. And that, you know what, that's a good point. Because like sometimes too is like a good CPA will sit there and say, hey, I know that your bank typically looks at debt service ratio. But this is how we run this business. This is how we manage it. That number is going to be tricky. For the year, we're always going to meet it. But there are going to be times during the year we're not going to meet it.
Right, because of up and down and seasonality.
But here's some other alternative ways to make sure you're comfortable that we'll manage our business this way to these metrics that will prove that we're comfortable that we can pay off the debt and that you're secure. And they'll help you walk through like, hey, this is different ways to manage your risk. And we'll report and we'll commit to this. So it's not just like, hey, the bank says this. Sometimes there's enough money and you're so small and they're so big, you might just have to take it. But there's other times with the good CPA, it says, hey, this is how we run the business. This is what happens. That metric won't work and we're going to trigger it 5 times a year. Do we have to go and get a waiver 5 times a year? Or
Right.
worry that you're going to call it 5 times a year? Can we manage your risk this way with these metrics?
Yeah.
And we actually just did that with that company that the buyer bought the 92-year-old guy, the VP of sales bought the 92-year-old guy out. Said, hey, we're going to trigger this within 3 months. You're going to give it to us and we're going to go default, technical default. We're going to be able to pay by the end of the year. We're going to have $2 million.
Because we did an inventory purchase or we did
Right.
something and it's going to make our numbers wonky.
Right. Cool. By the end of the year, we're going to be $2 million in excess of whatever you need and we'll never have an issue again. But 3 months from now, using your standard metric, we're going to go into technical default. Let's avoid that and say, here's what's going to happen. Can we manage a different covenant, a different metric to make sure that we're compliant and that your company is going to get paid?
Wow.
Now, if you don't have a good CPA, you're just going to take what the bank says and all of a sudden you're going to get a letter from them saying, hey, you're in default. We want our money back. They probably won't do that, but there's a risk they could do that.
Yeah. Well,
and why not say, hey.
As we know in this world, anything can happen and we're in the middle of anything happening right now. Yeah.
Which is actually helps as a coach and as an advisor. It helps where we used to say, well, anything could happen. And I'm like, yeah. I'm like, well, I go, the world could end and all businesses could shut down. And he goes, yeah. I'm like, well, for a third of the economy, the world ended and shut down.
And functionally it shut down. Greg, I'm a $1 million business owner, or maybe $800,000 to $1 million, and I think you've spoken the truth. I'm like, okay, it's time for me to change CPAs. Where do I start? Do I just go to the online and type "good CPA near me"?
No. Well, I guess you could. I wouldn't do that. If you probably have you talk to your bank. If you have a bank, talk to your bank. If you have others in your industry who you respect and trust, or they're complementary competitors, you guys bid in the same job, but you have slightly different services.
Right.
Talk to people that you're comfortable with, that you can get their information. If you're, like you mentioned, you have that Facebook group,
right,
where it's a community of business owners that get to talk about business issues. This is a business issue that is a perfect thing to talk about with other businessmen. Like, hey, I'm not happy with my CPA. I'm not getting X, Y, and Z support. Does anyone have a CPA they like that does these things?
Right.
Other business owners are much better at referring their professionals. The other way is talk to your other professionals. If you have used an attorney for, like, you have to deal with attorney for permitting, you have to deal with an attorney for collections, or attorney for your estate and trust.
Yeah.
Or your real estate. If you have a financial advisor, those people also have other professional connections of people that they trust, that they will only send their clients to other professionals they trust. So that's another place to look. I would start with a group or association of other like-minded business owners, because they're probably having similar issues to you.
Yeah.
Then the second level, at a very close second, would be professionals that you already use. And who do they, when they have the chance to refer to another CPA, who do they like to refer and why?
Yeah.
Those are probably the quickest ways to do it.
And I think what I've learned from you here is, if I was getting that referral from somebody else, even that person would say, tell me a little bit more about your business and what you're trying to do. Not just, right, this CPA just graduated and they're really trying to grow their practice. That's not the CPA you need.
No.
If you're a growing firm. I want to add something to that, Greg. Many people who listen to the show are part of their industry association. That's a sign of a growing, healthy business when they take a step and join whatever trade industry association they're in. Just because a CPA or any professional has joined that industry association does not mean they're the right CPA for you. It just means they're trying to do their marketing through the association. So you still need a filter. You still need to go through and make sure that the questions you've raised today are being answered. This person's there for whatever stage of growth you're in. What occurred to me is I should probably call, if I'm of a decent size, if my business is around that $1 million mark, I should probably call my own local M&A firm and ask them who they would suggest as a CPA, because you guys, guys like yourself, you deal with this all the time.
Well, that guy, I keep telling myself, don't use exactly. I always say that, but
well, you like to be specific, Greg. So exactly is specific.
Specifically, no. That example I gave with the guy who had the $300,000 issue. When he called me and said, "It's ready. I need to get a new CPA," I went into my database. I have like about 140 CPAs in there, and I narrowed it down to 3. And I said, "Here's 3, and here's why I'd recommend these 3. Who do you want the introduction to?"
There you go.
So talking to a professional that deals with other professionals, they will make sure that you get treated. Particularly if you're a financial advisor at any kind of professional, their reputation is staked on who they refer, because they know if they screw up that referral, they may lose your business.
Yeah.
So most professionals take great care to make sure you get treated right and get the right introductions. So that their reputation stays intact.
Greg, this has been fantastic. You covered a lot of ground here. I really appreciate. I'm so happy I know you. Isn't that what you wanted me to say? I'm lucky to know you.
Well, you're the only one that says that, so thank you.
I hope everybody listening understands Greg and I are joking with each other. But Greg, if somebody does want to get in touch with you and ask you questions about this, how would we find you in the big wide world?
You can find me through, you can go to our website, beaconequityadvisors.com. My information's on there. Or you can email me directly, G DeSimone which is my name, DESIMONE, at beaconequityadvisors.com.
Perfect. Yeah. And then it'll be in the show notes as well. So people that are looking at this episode or link through the show notes, you can find Greg there. And if you're absolutely stuck and you can't find Greg, contact me and I'll get you in touch with him. For those of you who are interested in this kind of thing, please remember there are free downloads on my website. One of them is called the Finance and Forecast Meeting Script and Agenda. I lay it out for you there as the president, CEO of the company, how to have these financial meetings so that you can start to translate from your end what's happening inside your operations and talk to your CPA or your bank. So those are free downloads there. And Greg, obviously, wealth of information. I all joking aside, I really appreciate being able to call on you for something like this.
It's always my pleasure.
All right, Greg, thanks so much. And we'll talk to you soon.